You'll hear these terms, debt and equity. So when you use your money, your cash, your return on value or return on investment is actually quite lower. Okay. Because you're not leveraging money appropriately to buy inventory. So first thing I tell people is don't utilize your own capital because your actual return on investment is much lower because you're not buying in volume. You're not buying things that may be outside your cash price range. Let's say you only have $100,000, but you really got a tiger by the tail in River Oaks on a $400,000 purchase that's worth 1.2 fixed up with 200 repairs. You don't quite have the capital for that. And you're missing out on these opportunities. The second thing I'll tell people to do is only use cash is if you're going to the first Tuesday of the month. Okay. So what you do is you buy those properties cash and then you come to someone like me the day after and you cash out, refinance it out. So you get your initial acquisition, the majority of your initial acquisition paid back to you, repairs held in escrow for draws. And now you have enough cash to go to next month's state sale and buy something cheaper. So those are the only reason why I would tell somebody to use cash if you're leveraging that opportunity to buy something pennies on the dollar and then get that money that you deployed refinanced out so you can go buy something else.
All right. I do hear you. So this is what my takeaway from what you said. I have 100,000. If I put all my cash in that 100,000 and I end up holding the house for longer, or I screw up on the rehab budget and now I need another 20K, where am I going to pull that money from? Because I'm pretty sure, the lender won't want to come in and be a second lien positions or anything like that.
No, there's very few second liens out there anymore.
So that's big. But I'm in the school of leveraging, right? You got to keep your cash in the bank. And I say this, and you're not going to like me for saying this. Let's say I made a mistake on that purchase. I did my number wrong, but I leveraged a lender and I was able to loan money. And I can't no longer make payment. At least I'm not losing out 100%.
No, you're absolutely right. I mean, even as a lender, I'm leveraged appropriately. Yeah, do I have to deal with all the property stuff to flick out? But it's a very valid point as the investor why you don't use your own cash. Your liquidity allows you to move and be nimble in changing markets. So if you've deployed all your capital and you made a mistake, you're not getting your money back. If you use my money, you have the ability to leverage your debt, okay, and have more safer with your liquidity, making moves and making financial decisions.
Yeah, and the second point that you made about the tax sales, I think that's really great. Have you guys always done that?
Mm-hmm. In fact, we go down there just to kind of remind people. We have a lot of different opportunities on cash outs and stuff like that when people buy things cash where they inherit a property that they don't want or all that kind of stuff. So that's a good portion of our business. People actually just coming to us and getting their money back that they paid for something cash or they inherited a property.
Okay. Yeah, I mean, that's huge because we all know that when you're down at the auctions on Tuesday, on the first Tuesday of the month, you got to, get a suitcase of cash or cashier checks or something, but it's cash.
They take a cashier's check or money order and that's all they take.
Yeah. Okay. Well, that's great. So now I got a few deals under my belt and I'm thinking of scaling my business, my portfolio, real estate portfolio.
Okay.
Is Jet still a fit for me? Should I be looking for new lenders?
Yeah, definitely. And the reason why and not just because I work here, but the reason why I consider us a good fit is a few reasons. We offer products for investors, whether they're flipping homes, they're buying them and fixing them, and they have the opportunity to rent them. We have 30-year products. We have been in the business for so long that we have actually made banking relationships where we can get a private equity for like $50 million projects. We're just kind of like your one-stop shop for anything investment in real estate. We can't help you with anything owner-occupied, like consumer owner-occupied, like a homestead, but anything else that has to do with an investment or a business that is in line with real estate, we basically have the product for you and you can figure out an asset-based way to solve your problem. Because that's really what we're doing. You have a problem. Your problem business is that you need to buy this piece of inventory. You very well or well may not have all the money to do so. We come as a solution with capital to increase your volume and increase your bottom line.
Okay, maybe walk us through a high-level overview of what a deal look like.
Sure.
I got a house under contract. What do I do?
So first thing that you would do, there's a very simple lead intake on our website. And it's very just very little information about you and the project and what your plans are. You can go do there. You can give us a call. You can text us. You can chat us online, whatever it is to get us the information.
You guys are everywhere in Houston.
We're everywhere. Well, I mean, again, for 21 years, we've seen every market and just to kind of give you a side note, there is not a buying season. Every market's a buying market as long as you pivot within the market that you're in.
This episode is brought to you by National Real Estate Intensive Group, a national independent insurance agency specifically for real estate investors. I personally use REIG for my investment properties. They offer a low monthly payment option to help you to lower your cash allocation when buying an investment property. If you're looking for insurance coverage for your flips or your rental, reach out to them. You can click on the link in the show descriptions, or you can reach out to Jules at 816-946-8443.